don't be fooling around. I tell the truth. Nothing secret.
There is a connection between every institution grown out of this country and white supremacy, the nation as a whole, including its laws and its institutions.
What you have is a tension between nationalism and globalism.
They had to create something in the mind of the poor whites that distinguished them and separated them from the blacks. And that's where you develop what I call, and James Baldwin called, the religion of whiteness.
The police that answer to the politics of that community are going to be driven by the economics of that community because economics and politics overlap.
You know why I wanted to be a politician in a time when we disenfranchised? Because of power.
African Americans spent $1.3 trillion last year, making us the 16th wealthiest nation in the world. Why have we not turned those riches into wealth to develop our community?
Tamir Rice, Sean Bell, Sandra Bland, Eric Garner, and Michael Brown, just to name a few.
Some may incorrectly classify their death as police brutality. However, it is in fact murder and a form of terrorism. It is ironically very similar to what took place during chattel enslavement. What steps can be taken to make it stop?
Ain't the devil happy?
So what you just saw, family, is you just looked at the trailer for the Happy film. The premiere for the film will be, I'm looking it up right now, July the 18th. Okay, tickets are now on sale, so you can visit happyfilm.com. That's HAPI film.com. Once again, the film will be premiering on July the 18th. So get your tickets, family. I believe that tickets are $25. I actually plan on, we're throwing a Happy Film release party at my house. I'm going to have my aunties, my mommies, everybody coming over to watch the Happy Film. So family, be sure to tune on them. Peace and love, family. Welcome to another Truth to Power Talk with your sister, Dr. Maat. Thank you for joining another powerful discussion. And today I have with me another powerful guest, brother, Mr. Kenneth Kelly. How are you, brother?
I'm great. How are you doing this?
I'm doing all right, brother. I can't complain. Thank you so much for coming on the platform and sharing your time with us. I know that you were also a part of the Happy Film project. I believe that they interviewed you extensively for the project. And so we're going to get into that a little later. So family, before we do get into that, I do want to read Mr. Kenneth Kelly's bio. Is actually on nationalbankers.org. I won't read all of it because Mr. Kenny, when I read your bio, I said, this is a very, very accomplished brother. Okay. And so I'm not going to read all of it, family, but if you want to read his entire bio, please visit nationalbankers.org. All right. All right. So it says that Mr. Kenneth Kelly is the chairman and CEO of First Independence Bank, headquartered. I hear some echo, Mr. Kenny, in the bag.
My end, you think?
Yes, sir.
I tell you what, I'll just hit mute.
All right. Fantastic. So Mr. Kenneth Kelly is the chairman and CEO of First Independence Bank, headquartered in Detroit, Michigan. It is now the 7th largest African-American controlled commercial bank in the country. Kelly, it says Kelly, I will call him Mr. Kelly. Mr. Kelly is responsible for leading the bank's financial operations, assets, policies, and regulation, in addition to overseeing the company's management infrastructure. All right. It says Mr. Kelly earned his bachelor's degree in electrical engineering, and family, you know that I have a doctorate of engineering. And my focus was, it was electrical engineering. I also have a BS in engineering. So I was happy when I read this. I said, okay, we have a thinker, a problem solver. So he's earned his bachelor's degree in electrical engineering from Auburn University and earned his executive MBA degree from the University of Alabama. Mr. Kelly is married and is the father of 2 children. So thank you so much, Mr. Kelly, for coming on the platform. Like I said, family, if you want to read his entire bio, please visit nationalbankers.org and search for his name. So, Mr. Kelly, I'm going to get right on into it. I know that for the Happy film, which focuses on, I guess the economics, of course, that is the center, or the central, I guess, topic in the film. And you were there, and there was a lot of other experts featured in the film. So my question to you, Mr. Kelly, is this. I know that they interviewed you extensively for this film. What were the major takeaways from this film? So when you spoke, about banking, about economics, what do you want the audience to take away from what you provided, the information you provided in the Happy film?
Well, the thing that Dr. Maat, let me say thank you so much for having me. This is an honor and a privilege to talk a little bit about passion that we have in the banking space, and that is being sure that each of us understand that we can reach our own financial destiny. And it doesn't matter if you are wait staff, if you are actually a CEO, or if you're actually just kind of an everyday worker in today's economy. You can make the decision to have a successful financial life without worrying about changing your lifestyle. And let me give you one example. And this is not in the film, so you're getting a freebie here tonight. One example includes if you save roughly 18% of your salary from the time you are roughly 21, 22, 23 years old until the time you get 60, you can retire. I want you to hear this. You can retire without changing your lifestyle. So that's a commitment that most people don't make. It's a commitment many of us have to try to catch up on, but time runs out. So the compounding time value of money, if we just take a simple principle and say, I want to save 18% of my salary, no matter how much I make and when I make it, if I save that amount across that lifespan, when I get to the age of 60, 61, I will typically have enough money that may last my lifespan without changing my lifestyle. Now, that requires a lot of discipline and work, but the numbers are there and they prove that point. So that's a freebie. That was not actually in the film. To your point of what was in the film, it was really about focusing on some of the basics. One is understanding that as a culture, we have a high level of respect for our reputation. But financially, which is really our reputation, called credit score, we sometimes don't take care of that the way we should take care of that. And my point is, if you don't take care of your financial reputation, your credit score, it will cost you more money out of your pocket over your lifespan. And so that's a very simple principle that we need to really infuse in our kids early on, the importance of that. And I know there are times that we can say, well, I can't make it here, so I'm gonna just try to get by there and maybe not take care of that. But the importance of doing that, and I promise you, I have not always been in a position to pay all of my bills. I get it. So the point I'm trying to make, though, is we should be infusing that into the character of our children and being sure that they are positioned to be successful financially. The other thing that I talked about that is in the film that we should all adhere to is, to a degree, there is an amount of selflessness that we have to demonstrate if we're going to ensure that our families accumulate wealth. But what does that mean, Kenneth? That means that when we're thinking about simple principles and products such as life insurance, being sure that we take the time to buy a term life insurance policy, which is ensuring really your salary for your family. And what happens is, if you, under your demise, unfortunate demise, of course, there is a sense of security there for your family. I think I may have talked about, and I don't know if it's actually in the film, the fact that Master P, who many know, had a start because of a life insurance policy that he talked about on many occasions. And so understanding that foundational financial principle and how it can really change the trajectory of your life and your family's life really requires a little bit of selflessness. So those are the types of principles that we talked about. And then you can go all the way from the checking and savings account all the way up to more sophisticated investments, stock market, and individual stocks. But really, if you take the harnessing of what we just talked about and just start with those couple of principles, you could really change the destiny of your family's future.
Oh, well, Mr. Kenneth, I mean, what you said was just refreshing. These are things that my family and I, we talk about all the time. And I've heard you say, you know, similar things. You said a savings account. So you said save. You mentioned life insurance policies. You mentioned credit score, you know, and so I agree with you. Those things are vital in, you know, creating families and maintaining families that are economically, you know, stable. And so I definitely, you know, agree with that. And so those were the takeaways in the film. All right. Well, let me ask you this, Mr. Kenneth. In 1884, right, between 1884 and 1935, we had 134 banks. I believe today we have 21 banks. Can you explain to the viewers what happened?
Well, you know, banking in general, let's talk about it at a macro level. So banking in general has also shrank over time. And my point being, there were close to 20,000 banks, total banks in the country. And I'll give a quick, you know, quick breakdown of all of these banks. There were about 20,000 banks. Now they're roughly about, and I'm talking about over the last 25 years or so. And now we're talking about roughly about 5,000 banks, a little bit over 5,000, 5,500 just for round numbers in the country. And that does not include credit unions. We're talking about specifically banks. And of those, there are only, as you just mentioned, 21 African-American. There are about 70 Asian banks. There are about 40 Hispanic banks and about 20 Native American banks. But what you also have in the time frame you talked about, the late 1800s until the early 1900s, was really a very, very segregated society that lived up under Jim Crow. And so there was a need for a banking system. If you go back further in the history that you just picked out, in 1865 was the starting of the Freedmen's Bank, right? And the Freedmen's Bank had basically, I think, about 70,000 depositors across a host of states across the country. It was really like a national bank for slaves. And unfortunately, that bank wasn't managed by people who looked like us. And it eventually failed. They brought Frederick Douglass in at the last minute to try to save it, but it failed. My point is that led to all of these smaller banks that you just made reference to that basically kind of carried us through the late 1800s into the early 1900s. And what we saw is that the more we found ourselves being integrated, there was less of a reliance on, I would say, serving customers who look like us. And so many people moved away from the city centers, where if you look at many of our banks now, they exist in city centers, and they moved to the suburbs. And so the convenience of those locations without the scale of capital and technology has left those banks in more challenging areas of the cities that they serve. And they typically serve low and moderate income households in the cities that they serve. So that's a little bit of a high level lesson of banking, and in particular, Black banks. There's a great book that was written by Dr. Mercer Baradaban, and it talks about the color of money in Black banks. And it's a great history from 1865 all the way up to present day, where some of my peers and colleagues are actually quoted in that book. And so for anyone who has an interest in money, I would suggest you take a moment and read that book. Are you pulling yours off the shelf? Look at that. That is
yes, sir. Yes, sir.
Yeah, well, that just tells me a lot about who you are, and you're a very studied and learned person. But the point I'm making to the audience is, you know, reading that book just gives you a diagram and a history of African Americans in this country and money, and how we relate to money, and how really society relate to us as it relates to money. So that's a great book. I'd just like to promote it if those who might be interested in reading about the history of money and African Americans in this country.
Absolutely. And I'm glad that you mentioned the Freedmen Savings and Trust, Freedmen Savings and Trust Bank. That information that he just went over, family, can be found in Blueprint for Black Power. I tell you all the time, this is like my little Bible right here. Blueprint for Black Power. Dr. Amos Wilson has an entire chapter dedicated to Black-owned banks, and he calls them the creators of wealth. As a matter of fact, this is chapter 26, page 676. And on page 685, he talks about the Freedmen's Bank. So if you want to get into that history and know more, family, please purchase the Blueprint for Black Power. All right. So thank you so much for answering that, Mr. Kelly. Thank you so much, for answering that. And so let's move on. In this same book, Blueprint for Black Power, Dr. Amos Wilson says that we finance our own oppression whenever we deposit our money into banks that aren't owned and controlled by us. And I just want to read this quick little excerpt from the book. He says, in this context, it is readily apparent that by voluntarily placing or depositing their monies in white-owned banks, insurance companies, retail establishments, etc., multiple millions of Blacks concentrate or accumulate their monies under the control of the white elite in ways that immensely help that elite to further enrich itself and increase its power. This increased wealth and power is then used to dominate and disempower Blacks themselves. So what are your thoughts about that? Like, how do you feel? Do you think that's true, that when we put our money in Bank of America, Wells Fargo, and all these other banks that are owned by us, that we are in a sense financing our own oppression?
Well, I wouldn't go so far as say we're financing our own oppression, but the reality is we're not financing our own best interest. And so the point I'm making is that as you think about banking in this country has really created a lot of wealth. And if you look at any city center, major city, you're going to find one of the tallest buildings in that city will likely be a bank building. And so what you have to understand, and what I would like to share, is that when you think about banking and you think about the accumulation of money and the accumulation of capital, it happens somewhere here in America. And the reality is when it gets accumulated, the people who sit around the table determine its use. And if you're not one of those sitting around the table, then you're likely not financing your own best interest. And so that's the way that I would frame the response to that question. And so if we are to look at the banking system and how it works, the fractional lending concept works. It's just that it has to be applied. So what I mean when I say that is, if I take $10 from you, Dr. Maat, and I'm able to now lend out $9 of that to someone else, and they can take that money and either start a storefront or buy a house. And if those dollars come back to that exact same bank, I can basically earn a spread on that and take in, the $9 effectively that you're going to pay me plus interest. And then I can loan out about almost $81 or $8.10 of that, 90% of that. And so what happens is there's this domino multiplier effect that creates expansion in the economy. Now, one of the failings that we have, and particularly in the African-American community, is that in the Asian community, it is very clear that they spend money in and with Asians. And the dollar circulates in the Asian community about 27 days. In the white and Hispanic community, and I'm just going to use round numbers, that number is roughly about 20 days. In the African-American community, the dollar circulates about 6 hours. Now, I'll raise my hand because I'm as guilty as anyone else. But if you think about our paycheck and our paybooks, checkbooks, and where we spend our money, beyond some of those, I'll call them tertiary things that are very ethnic, like getting your hair done or haircut, other areas where we spend our money, most of the time it effectively is leaving the community. And so that is a challenge for African Americans in that they are not producer, the best way I can describe it, producer engines that allow for the circulation of that dollar multiple times in the community such that you get the multiplier effect. And so that is one of the challenges that we face in our community. There is a need for more small businesses. There's a need for a higher level of consciousness in how we spend our dollars to help ensure that we are getting a little bit of that multiplier effect in the communities that we serve.
Absolutely. I mean, I couldn't agree with you more. And that's why I'm so happy to hear that. I think I read an article a few weeks ago, and it said that there was a 400% increase in the opening of Black businesses. And so I was extremely, happy and proud of that, because like you said, we need to be able to spend our money with each other. So we have to start building or creating businesses in our own communities. But what I would love to see is more of us, if we came together and pulled our resources together to buy districts typically, and I'm from Baltimore, Maryland, and in Baltimore, I see, you have a Black-owned business over here. You might have 2 Black-owned businesses over here. You go across town, it may be a Black business over there. And what I would love to see is that we have a Black business district. So in Baltimore, downtown, in Baltimore City, downtown area, you have a little Italy, right, where you have a bunch of Italian restaurants and shops. And then out, I believe over in East Baltimore, is like a little area for Indian folks. In Catonsville area, there's a little Chinatown. The Asians buy up strips and stuff. And so what I would like to see is more of us buying districts, pulling our money together and maybe building like another, I guess what I'm thinking about is Tulsa, Oklahoma, and all of those districts that once existed. So that's what I love to see. So, I mean, it's great that we're creating businesses, but I would love for us to start thinking, in terms of, building business districts, not just a business here or a business there, but creating a business district, a district that is Black owned, owned and controlled by us. And so I would like to see that, which brings me to my next, question. I read in your bio, I read that you are based in Detroit. And I know that Detroit has a lot of issues out there, but I did read in the early, I believe it was in the early 2000s, Dr. Claude Anderson, he was trying to raise about $41 million to build a little Africa right there in Detroit. And so can you, I'm not sure if you're familiar with the project. If so, could you speak about that and what happened with that?
Yeah, that was before my, I would say move into Detroit. So I can't talk about that in detail. What I can tell you is Detroit has a history of liberation for African Americans. It's where many of our ancestors left the South to go and look for jobs working in the mills and the factories, and had one of the wealthiest, I would say, cities in the world there. And so what we know today, when you look at the BE 100 list, some of the largest African-American controlled businesses are based in Detroit. So many of them are affiliated directly or indirectly with the automotive industry. So Detroit has created a very unique, I would call it, a kind of in vogue class of builders in production who have been very successful and really have been role models for the country. So if you go to Detroit, you're going to find some elite business people there who look like us. The point you were making, Dr. Maat, is that when you look at, a lot of times our businesses, they are out in isolation. And so there is no concentrated effort to spend monies in a way that makes a big difference. Collectively, is what I just talked about, kind of this circulation of the dollar. And so that is something strategically I think should be thought about in cities where you have districts like what you talked about. Tulsa was maybe an example. And sometimes it's just as simple as one strip.
Yeah.
We have the Avenue of Fashions in Detroit. They're on 7 Mile in Livernois, which is where a lot of African-American businesses are. It is a business district that many people can easily identify with. And I think strategically, we got to have more of those discussions around the country.
Absolutely. Absolutely. But yeah, so yeah, I agree with you. But going back to Dr. Claude Anderson, I did hear that he came out to Detroit early 2000s and he wanted to build a little Africa. And I was just wondering how many people, since I know that your Black-owned bank, First Independence Bank, is based there. I was thinking if you guys had some involvement in there, but you said that was before you came to Detroit. But I did hear that or read that he was shut down. The project was shut down. I was told that the Arab and Asian business owners pressured the politicians in Detroit. And so then the politicians, didn't allow him to kind of, set up everything. I know they were trying to purchase, I believe it was like 20 acres of land there or something like that and put some businesses there. But again, the Arab and Asian business people started pressuring the politicians, and then the politicians wouldn't give them the necessary permits to manifest this idea of Little Africa. So he ended up having to pull out. And so anyway, going to my last question, I'm looking at I'm still in Blueprint for Black Power, the beginning of chapter 26. And on the first page, he defines banks, right? And he says, officially a bank is defined by federal law as an institution that both takes in public deposits and makes commercial loans. He says banks, like many other financial intermediaries, such as savings and loans associations and insurance companies, take deposits of funds from one group and lend those funds to another group. And he says a bank, as a financial intermediary, may accept deposits and funds from a number of sources and blah, blah, blah. So, when we view banks, we're viewing it as, like he said, like this intermediary, right? And so I take money from somebody and I'll loan it out to somebody else. So my question is, what policies or criteria do black banks have in place that will increase the number of Black business owners? Because in this question, I thought about this question because a good friend of mine, his name is Dante, and he owns a restaurant here in Baltimore. It's called Collins Seafood Family. You can Google it. If you're ever in Baltimore, please stop past Collins Seafood. But he told me that he initially stepped to a Black bank here in Baltimore, the Harbor Bank. And he said, look, I need to borrow $1 million, to get this thing started. And so the Black bank declined him. And so, they denied him. And so he ended up going to Bank of America. Bank of America financed him. And so now he has a successful business. He opened up Collins Seafood. And I believe that he and his wife just opened up a second location. So now I'm thinking about the amount of money that the Black owned bank could have made, if they would have given this brother a loan. But instead, Bank of America is now, reaping the benefits of that. And so my question again is, what policies and I guess criteria is put in place? What policies do you all have in place to increase the number of Black business owners?
I don't know that I would say we have policies that would increase. And let me come to the defense of Harbor Bank, which I'm also chairman of the National Bankers Association, which includes Harbor as a member bank. Okay. Decisions regarding banking and credit a lot of times are based on things that we can't talk about publicly. And what gets heard is the snippets of, I didn't get the money here, but I got the money there. But typically there's a bigger picture behind that story. And so not to disparage Harbor or the individual that you just mentioned, but here's the reality. If I am as large as a bank that you just mentioned, the credit and the risks that I can take are very different if I am a very small bank. And so when you think about banking and one is this big and one is that big, the ability to be able to say, you know what, I can take this risk here versus one who can't take that risk is just very, very different. And it doesn't mean that you don't have an affinity for financing that smaller, in particular, African-American bank, because most of us are in business to help African-Americans get in business. But the reality is that once you kind of really look behind the risk associated and the collateral that may be available to finance the startup of that business or the construction associated with that business, it could be one of those that you just have to make a policy decision that you can't do it. Maybe someone else can. And so back to Dr. Baradaban's book, if you kind of read that very carefully, what you find is there were a lot of those banks that failed because they didn't have policies in place to stop some loans that they should not have made. And that can easily happen when you have a high level of affinity and or you have kind of this natural, I'll call it friendship for doing business with someone because you believe in them and the financials there just doesn't substantiate it. Now, I'm not saying that his business was not going to be successful right. Based on what you said, it is. But the point I'm trying to make is for many African-American banks, we have a shorter pencil, we have a shorter leash on some of the decisions that we can make because we have a much smaller base to make that decision from. So that's the way I would describe it. Now, should there be a strategic effort to look at how can we finance certain projects? I will tell you yes, but that probably needs to come from the outside into the bank. As a regulatory entity, we don't have the luxury of saying we're going to finance black bank or black companies at a different rate or at a different from a different disposition than we would do white banks. Now, while our affinity is towards, of course, trying to finance as many African-American institutions as possible, we just don't have that as a luxury to say, okay, our policy is we're going to do this because those are Black, but we can't do these because those may be of another ethnicity. So I want to just be really transparent in that regard, that we have to look at the C's, the credit, the collateral, and character of the individuals. And that's a lot of times done, I would say, very methodically, because the intent is we've got to be sure that these institutions are able to stand strong and to last for the long haul. So that's a little bit of kind of the insight that goes into those credit decisions and how those decisions are made. And many times they're not personal. And when I say personal, meaning that the person is bad because we didn't finance them or something is wrong with them. They just may not fit the profile of the institution and put the institution in a position that it can last for the long haul. And so that decision sometimes can be made that may feel like it was not supportive of African-American businesses.
Absolutely. Absolutely. I want to go back to the Freedmen's Bank.
Certainly.
Yeah, I want to go back to the Freedmen's Bank. Now, okay. So you mentioned earlier that, that the bank did close, and I'm looking at Dr. Amos. I'm still in Blueprint for Black Power Family. He says that the bank closed after 9 years and the loss of approximately $3 million by over 61,000 African Americans. He says, thus stunning the economic growth for Black people in America. And then he goes on to say the same thing that you said, Mr. Kelly, is that, there was a lot of mismanaging of the money, but he says that that there were the principal managers of this company or of this bank, they were white. He says, including white ministers who shared a very significant share, they said, in the blame for the bank's ultimate downfall. So I guess my question to you is this. With the Freedmen's Bank, we thought it was a Black bank or a bank for Black people. But then, you read later on that it was really controlled by white folks. I have a Harbor Bank account, and I was excited when I first got my Harbor Bank account. And I remember talking to one of my aunts and even my father. And he said to me, you're with Harbor Bank. A lot of those Black banks they're controlled by the white folks. I don't even know why you might as well put your money in Bank of America. They're sold out, and they don't really control the bank. The control is in the hands of white folks. So they're like, both of them basically said Harbor Bank sold out years ago, and that's what they said to me. So I want to ask you, Mr. Kelly, what do you say to Black people, African American people who feel like, if I put my money in Bank of America, Wells Fargo, who cares? Because these Black banks they ultimately aren't being controlled by us anyway. So what do you have to say to people who feel that way?
Well, it's part of the challenge we talked about a few moments ago, right? So as we talked about the accumulation of capital in serving neighborhoods, if that belief is there, it prevents us from accumulating capital in those neighborhoods. And that's why many of our banks are as small as they are. And again, I'll raise my hand because I'm as guilty as anyone else on that topic. But the reality is that these institutions have typically a very specific mission. They have specifically focused on low and moderate income communities, which we disproportionately make up a larger share of those communities. And so there's a higher level of affinity. The Federal Reserve of Chicago, Federal Reserve of Boston, and the FDIC have all done studies on this, and they have proven that African Americans who seek assistance for loans are more likely to get more assistance when they go to a ethnic bank. That's just a fact. And that's no different if I told you, about schools, whether it's HBCU versus PWI, et cetera. There's a different level of affinity associated with it, whether it's going to a church or a historically Black church. There's a different level of affinity associated with that. So what we have to do is understand a little bit of the psychology and pathology that has taken place from the Freedmen's Bank. Those ghosts still haunt us. It's been 155 years back in March 3rd. But the ghost of that still haunt us in that we don't trust banks. African Americans have a higher percentage of individuals who are unbanked, meaning they don't even have a bank account. but they use check cashing and other alternative financial services. And those things hurt us when it goes back to my earlier comment of being able to save and have a higher percentage of your money stay with you, because we are using those more expensive alternatives because of some of the pathology associated with our beliefs of not trusting banks from the Freedmen's Bank up to, 155 years later.
All right, fantastic. All right, well, thank you so much for that explanation. And two more questions.
Certainly.
Yeah, two more questions. I won't, and then we'll get out of here. So what should we do? Okay, so let's suppose that all Black people, it's like what, 48 million of us here, 40 million of us here in the US. So what if, we did start banking Black, right? So suppose we all start putting our money in Black banks. How will Black banks then serve the Black community? If we were to do a mass exodus and we left Bank of America, we left Wells Fargo or whomever, right? SunTrust, whatever,
Sure.
PNN. Yeah. So how would you all serve us?
I have a very fundamental belief. I don't need all of your money. I just need some of your money. And so the intent here is not to be pro-segregationist, because that's just as wrong as segregation in itself. But the intent is, if you want some of your money to impact interests that align with your values, then you should consider supporting an African-American bank. And again, we don't need all of your money. We just need some of your money. And so that's the appeal that I would make to, individuals who are listening to us right now. I would also say to you, as we learn through the PPP, not only just put your money in the bank, but establish a relationship with someone at that bank. What you found is our banks overperformed in getting PPP loans to our customers. And in many cases, people who were not our customers, because we had the affinity for ensuring that people had an opportunity to participate. And then most importantly, not just putting your money in the bank, but also finding ways to develop a lending relationship with that bank. Because banks don't make money by taking your deposits. They make money by actually lending to you. So whether that's in trying to buy your first home, or, in certain markets being able to buy your first car, whatever that might be, consider that as an option. Now, the reality is, just because of scale and what we talked about earlier, sometimes you might have to pay a little bit more. It's no different than having that small corner store market that sells bacon. It may be $4.98 a pack, but if you go to Walmart, it's $4.65 a pack. But the reality is, that any profits made there are most likely to help serve and sponsor you there in your community. So that is the appeal that I would make to the listening audience on that.
All right. Phenomenal. Well, Mr. Kenneth, do you have any closing words for our listening audience? I'm looking at the chat and you all are coming in late, man. The show starts at 8 p.m. Eastern Standard Time, but our folks, they start trickling in. They start trickling in later. But what would you have? What advice do you have to give the closing audience? I know they're going to see more of you throughout the Hoppy Film. Again, family, please go to hoppyfilm.com. Purchase your tickets. Tickets are $25. The film will be premiering on July the 18th. All right, family. So I already talked with my family. So we're going to have a happy film release party. And so I'm telling you, family, this is going to be a very powerful film that all of us need to see. There are a lot of heavy hitters in the film. And so anyway, so Mr. Kelly, what kind of advice or closing words do you have for the listening audience who's coming in late?
Certainly. So I'm going to do two things. One, let me start at the top and talk a little bit about the film. The film is really demonstrating the history of business starting in Africa along the Nile. But most importantly, it talks about the relationship of economics, the relationship of politics, and the relationship of culture. And we're seeing that play out in broad daylight right in front of us right now in the midst of this pandemic, and how decisions are made and how who receives funding and where money and wealth transfers. So that is a truism about the film that I like, that I think everyone should consider watching it for. At a personal level, what I would say to the listening audience is, regardless of where you stand today financially, know that you have the capacity to change your financial destiny. And it just only takes a little bit of listening and a little bit of learning and studying from your own perspective, whether that's first improving your credit score, which will save your family a lot of money over your lifetime, whether that's ensuring you have a life insurance policy, which could create security for your family. So those very simple foundation principles are things that all of us can adhere to. They're not as complicated as they sound. It takes a little bit of time to come up to speed, but most importantly, all of us can do it, and all of us need to do it, not for ourselves, but for our loved ones.
I mean, I couldn't agree with you more. You said life insurance policy. You talked about savings. We didn't talk about stocks and like investment stocks, real estate. We didn't get into that, but I couldn't agree.
That's getting up the scale to 8, 9, and 10. So we want to start with the 1s and 2s and 3s at first, and, you know, get there. But that's something we can certainly come back and have a deeper conversation regarding.
Yes, sir. Well, Mr. Kelly, thank you so much for coming on the platform. I thoroughly enjoyed your conversation and I learned a whole lot. So thank you, brother.
Excellent. My pleasure. Thank you for having me.
No problem, brother. You take care.
You take care. You too. Bye now.
Bye-bye. All right, family. So that was Mr. Kenneth Kelly. He came in, he dropped a lot of jewels. And these are things that, again, my family and I, we talk about often, you know, making sure that we have insurance policies, savings accounts, working on our credit score. Because, again, these things are key to building economically stable families, and that should be the goal. So a lot of folks ask me, well, Dr. Maat, what should be the highest, highest priority on the Black agenda? And I say, well, to build strong and healthy families. And in order to be strong, we got to make sure that we have our economics in order. So family, be sure to go to the happyfilm.com. All right, go to happyfilm.com, family, and get your, I'm getting ready to pull it up. Go to happyfilm.com. Get your tickets. The tickets are $25. The premiere will be on July the 8th. I'm going to play the promo one time. It's a powerful promo, family. Peace and love.
Another secret.
There is a connection between every institution grown out of this country and white supremacy, the nation as a whole, including its laws and its institutions.
What you have is a tension between nationalism and globalism.
They had to create something in the mind of the poor whites that distinguished them and separated them from the blacks. And that's where you developed what I call, and James Baldwin called, the religion of whiteness.
The police that answer to the politics of that community are going to be driven by the economics of that community, because economics and politics overlap.
You know why I wanted to be a politician in a time when we disenfranchised? Because of power.
African Americans spent $1.3 trillion last year, making us the 16th wealthiest nation in the world. Why have we not turned those riches into wealth to develop our community?
Tamir Rice, Sean Bell, Sandra Bland, Eric Garner, and Michael Brown, just to name a few.
Some may incorrectly classify their death as police brutality. However, it is in fact murder and a form of terrorism that is ironically very similar to what took place during chattel enslavement. What steps can be taken to make it stop?
Ain't the devil happy?
All right, family. So join me here tomorrow at 8 p.m. At 8 p.m., I have with me Dr. Charles Finch. He's coming on the platform tomorrow, and we're going to go all the way in, family. We're going to discuss science, mathematics, evolution, and also we're going to be banging on the Bible just a little bit. We're going to go in on the creation story. All right. So, family, join me back here tomorrow at 8 p.m. And I believe on Wednesday, I have Dr. Patricia Newton coming on the platform. So she'll be on at 8 p.m. So, family, if you haven't subscribed to my channel, be sure to subscribe to my channel on YouTube. I know some people are watching on Facebook, but please head on over to YouTube, click subscribe, and also click the notification bell so that as soon as I go live, you will be notified. All right. I'll see you guys on Wednesday, Tuesday and Wednesday, tomorrow and Wednesday. All right, family. I love you. Peace and power.